Hey everybody, Artwood Mortgage Team, your favorite mortgage guy on the planet. If you didn't know, just ask me. I will tell you. I hope you have. I'm going to try to be less than 4 minutes, maybe as little as 3, maybe as long as 5. But it's been a minute since I have given you an overarching. We just had the BLS jobs report come out last week. We had CPI come out within the last 24 hours. And we had all kinds of things. So we're just going to hit the ground running because these are the things that determine how busy I am and what your mortgage rate is. So stick with me real quick. So today we had CPI come out, and I got some notes here because I can't remember. I'm getting a little old. But we had CPI come out today, and it came out basically a little bit lower than November because we're actually reporting on December. So it came out a little bit. And here's why that's important. Because in November, it was coming out of the government shutdown, and people thought that's a BS report. There's no way it went from 3 to 2.6. Actually, it was like 2.68, so it was rounded up to 2.7, actually 2.71. So what was nice about that coming out today was that it actually says, hey, that's a decent number. Right? That's what it should have been. It's not false. So it actually came down from 2.71 to 2.68. So that's great. Now, you would normally think that the mortgage bond market would react favorably, which it really kind of flatlined all day long. And that was for 2 reasons. Numero uno was because global bonds in Japan were selling off. And look, this is a global economy. So what happens in Japan, what happens in Germany, what happens in Italy, what happens in Africa, it matters what happens here. But the other thing is, you probably read that the Department of Justice basically sent the Fed, or Jerome Powell, said, hey, we're going to do a probe into this renovation in Washington, D.C. to your office. So there's a lot of smoke and mirrors there, and it just kind of, not going to get political at all, but just some smoke and mirrors there. It seems to be just noisy because Fed Chair Powell has 4 months remaining. So who knows? I don't know what the hope is there, but it does when you have some uncertainty in there. It's like, what's that going to do to the bond market? So there's all kind of different folks that report inflation. There's actually another source called Trueflation that actually reported inflation at 1.87. So if you've been following any of this, you know that jobs and inflation are what drives mortgage rates, because it's what happens with bonds, with mortgage bonds. So if we could get to that 2% inflation number, then Feds are more likely to cut rates. So they've cut rates 6 times over the last 15 months. And the rates finished at the end of the year as low as they had been. So anyway, there's that. Then we get to the jobs report that came out Friday, and they were expecting 73,000 jobs, and 50,000 were created. And they revised November from 64 to 56, and they revised October from negative 105 to negative 173. Now, the reason October was so bad was because that was when everybody's benefits ran out from the Doge cuts. But if you look at things, they are not great as far as employment. In fact, the only of those 50,000, the gains were all in healthcare, social assistance, and leisure and hospitality. So you look at healthcare, that doesn't judge the health of the economy. That's not small businesses, medium businesses hiring. Social assistance, same way. And then you look at leisure and hospitality. Well, that's December. People are traveling, so I imagine that would be higher. But one thing that actually, because it was not a great jobs report, but one thing that kind of muted that reaction in a not positive way was the unemployment rate from 4.6 to 4.4. Now, I cannot tell you, I'm not smart enough to tell you why that is, but all the folks that I listen to, they were over my head. They're just over my head. But that's one of the things that going, oh, the unemployment rate dropped, and that's what the media focuses on. And I was like, well, wait a minute, we can't seem to have enough jobs here. So the other things on those reports as well is they never seem to get it right the first time. And we've talked about this before, but the BLS, they come back at the end of the year and say, oh, this is what we reported as far as unemployment rate, and this is what actually was revised. And there were 3 months where they were off by 0.1. So like in February, it's supposed to be 4.1, and it actually revised it to 4.2. Well, those are 3 months that hurt the bond market because the unemployment rate, went down. Sorry, the wrong way. They reported 4.2, and it actually was 4.1. So that hurt the bond market. Same thing with these BLS jobs reports. They keep revising them down. So the headline number, if you look at it, I mean, man, if I knew how to operate, so show you the screen, you have all these different times where it's like, hey, we reported 60,000 reported, and then next month they came down to 30. Well, we already took the hit, and they're not going to. Anyway, I get very frustrated with that, and I'm almost out of time. So then the last thing to talk about is Trump's news on Friday as well. I think, I can't remember, that he's going to have Fannie Mae and Freddie Mac buy $200 billion in bonds, in mortgage-backed securities bonds. That would be something that would really help the mortgage rates. But there's no other plan other than it's coming from Fannie Mae and Freddie Mac, which is great because it's not coming from the Treasury, which would mean the deficit, spending more money. This is coming from a private entity, well, government private entity, that has all this excess money and needs to put it in deployment for some cash. So there are a lot of things as we go into this year. Gosh, and I can't believe I'm running on 7 minutes. A lot of things to think that maybe rates will go down, but for the last 4 months, we stayed in this very, very narrow range, and it's going to take something big to push us out either higher or lower. So thanks for sticking with me for 7 minutes. I'm Art Wood, your favorite mortgage guy, and I'll turn your mortgage into a work of art. Take care.